Alright, yes guys, welcome back to another video on the channel. Alright, in today's video, we're going to be going over the ICT unicorn model, a fully updated and complete guide to profitability. So we're literally going to be going over every single thing that you need to know about this specific strategy in order to see consistent profitability. Now, before we get into today's video, I've got some very big news to announce. The live trading signals room is back open to the public. We initially closed this group down because there was just way too many people joining and it was getting way too hectic for me to manage. However, it has been a very highly requested topic, guys, and a lot of people, they want to get inside. I've been getting a ton of messages saying, Ben, reopen it. I need to get in there. So I'm going to give the people what they want, and I've decided to bring it back. So if you're not already inside, guys, make sure to secure your seat right now. Link is in the description. Now, just to quickly show you, we've actually upgraded the server. So we're no longer on Telegram. We've now moved over to Discord. So we literally have everything inside of there in order for you to succeed, okay? This includes mentorship course videos, so you get a full A to Z guide on all of the strategies that I personally trade and everything that you need to know about ICT concepts. Everything is laid out inside of these videos. We also have an A+ checklist. We go over risk management, psychology. There's a ton of channels in here which literally cover everything, guys. It's impossible to fail. And of course, the main value, you have the NQ live trading room where you can come watch me trade live every single morning at 9:30 a.m. New York time. Let's say for any reason you can't tune into the live streams, that's fine. We have the signals chat as well, where I actually send in whenever I'm going long or short, etc. I'm sending in these signals in real time. So if you're at a 9-to-5 job, don't worry, you will still get alerted if I enter a position. We also have a daily analysis channel, so every single morning I will post the levels that I'm monitoring for the NASDAQ, which is the asset that we trade. So as you can see here, previous daily high, previous daily low, etc. Okay, you get every single level that I'm watching, you're gonna get alerted, and that will pretty much give you a bias and framework so you can approach that day with confidence, okay? And obviously don't worry as well, daily bias will be heavily explained inside of the live streams before we start that trading day anyways. And then of course you have all the chat rooms, right? So the trading chat, wins and results chat. There's a bunch of stuff in here, guys, I'm not gonna go over. You can have a look for yourself once you gain access. But we also have a Ask Keswick channel, so you can literally tag me in the chat, ask me a question. Let's say you're struggling with risk management or psychology. You can ask me any question that you like, of course, trading related, and that question will be most likely answered by me within the next 24 hours or whenever I'm free. I'm always looking in there, I'm always active inside these chats, so I'm replying to all of you guys. And also we have the weekly results channel. So before we get into this video today, I just want to share the results with you from this week's live trading. So including all of the wins and losses, all right, I'm fully transparent, guys. I'm not trying to hide anything. When I take a loss, I take a loss and I share it publicly. So Monday, we actually took no trades. Tuesday, we took 1 W for 70 handles. Wednesday, we took a small loss of 17 handles. Notice how the losses are much smaller than our wins, almost 5 times smaller. So Thursday, again, we took 2 losses, only lost 23.75 handles, which is crazy, all right? That's exactly how you wanna manage your risk. Big wins and very small losses. And then Friday, we took a small little W of 45.25 handles. Total weekly gain for this week was 74.5 handles. So we've closed out yet another week in profit. Guys, if you're not already inside of the live trading signals room, I highly recommend that you secure a seat right now whilst the doors are still open, because who knows, we may close in the future again. Since we're reopening doors, I'm gonna be very kind. I'm gonna treat you guys. We're gonna be running a 50% off lifetime access sale to celebrate this. So if you're someone that's actually looking to take your trading to the next level, you're looking for that mentor to guide you literally every step of the way on live stream, where you pretty much get a one-to-one session with me every single morning, make sure to go secure a seat right now. The links are in the description. All right, so let's start off with what even is the unicorn model in the first place, right? For someone that's completely brand new to ICT, they might hear this concept and they might start laughing, right? Because it is a very unique name for the strategy. So pretty much all a unicorn is, it's a breaker block that is paired or overlapping with a fair value gap, okay? So you have to make sure that you have both of these P arrays, okay? You have to have the breaker and the fair value gap in order for that to be a unicorn strategy, right? If you don't have the breaker block and you just have the fair value gap, then that's not a unicorn. Same thing goes for if you have the breaker block and there's no gap, okay? That is not a unicorn model. You need both PD arrays overlapping each other. So I've actually drawn out two examples here. We have a bearish example and we also have a bullish example. So let's go over the bearish one first. Now let's imagine that price is coming up to a buy side liquidity level. Okay, that is what you're expecting here, guys. Unicorn models, they always happen at buy side or sell side liquidity levels, preferably an external level, meaning outside of the range. And this is more of a reversal strategy rather than a continuation. Okay, we sweep buy side, we reverse. We sweep sell side, we reverse to the upside, right? That is the unicorn model. It's a reversal model. So we come up, we sweep buy side liquidity, right? Price comes up, it creates the first initial swing high, okay? Retail traders come in, they look at this thinking that this is resistance, right? And price is actually gonna sell off here. So they start entering sell positions, right? They start shorting this. Okay, they're getting in very, very early, right? Us ICT traders, we're expecting this to get absolutely ran through and sweep buy side first, taking all of them traders out. So what happens next? We get that next swing low, which is then followed by that higher high, taking out the initial phase of these retail traders here that have actually shorted this and thought this is resistance. They get absolutely stopped out. A lot of stop loss orders are getting filled. Orders are flooding the market, right? After that higher high, you get that next lower low displacing through that initial swing low. Now, once we displace and close below that low, the breaker block will be formed. So the bearish breaker block in this scenario here is gonna be the lowest down close candle inside of this price leg here. Now, usually with displacement will come a fair value gap or imbalance. And what you want to look out for, this is very important, guys, you want the fair value gap to be in the same area as the breaker block, okay? Meaning it's overlapping each other, as you can see in this example, right? If the fair value gap, for example, is, let's say up here or even down here, okay? Yes, it's still valid, but it's not going to be as high probability compared to if they're overlapping, okay? Ideally, a unicorn model, an A+ kind of setup is going to be when both of the PD arrays are overlapping each other. So keep that in mind. Now, if this still sounds a little bit confusing to you, all right, don't worry at all. We're going to jump into some live trading examples later on in the video and actually showcase you this in real time, okay? So don't get too confused. Don't worry if these diagrams or examples that I've drawn out don't really make sense to you. We're going to jump into that later on, okay? So stay tuned for that. But anyways, the bullish example, okay? It's literally the same thing, just flipped around. So instead of waiting for a sweep of buy side liquidity, you're waiting for a sweep of sell side liquidity, okay? So price comes down to a sell side level, right? We create that first initial swing low. Retail traders come in, they're looking at this as a support. They're waiting for a bounce, okay? They see this bounce, they're entering buy positions, okay? Price creates that swing high. It's then followed by a lower low, okay? Taking out the retail traders that are buying the bounce off of so-claimed support. They're getting stopped out. A bunch of orders are flooding the market. And then we get that actual real move, which is the higher high displacing through that swing high and closing above, okay? And then the bullish breaker block is formed. So in this case, it's not going to be the lowest down close candle, right? It's going to be the highest up close candle. That is going to be your breaker block, okay? And again, with displacement comes a fair value gap, which is obviously this gap here. Now, make sure that it's overlapping the breaker. If it isn't, just keep in mind that it's less likely to actually play out. All right, so number one on the checklist, guys, what you're looking out for with this model is going to be a sweep of liquidity. So as you can see, I've just written out for you lot here. I'm literally going to be listing out every single thing that you need to look out for when you're trading the strategy. You can screenshot this at the end as well, so stay tuned for that. But yeah, number one is a sweep of liquidity. So this can be buy side, sell side, it can be session liquidity as well, such as London lows, London highs, that's even better, okay? Again, Asia highs, Asia lows, a sweep of liquidity. All right, number two on the checklist is gonna be a displacement. So whether we sweep buy side or sell side liquidity, right, we need a displacement in the opposing direction. So let's say we've swept buy side liquidity, we're going to see a displacement in the opposing direction lower, okay? It's going to be the other way around if we sweep sell side liquidity, right? You want to see displacement higher in the opposing direction, okay? It's very important we see displacement because without displacement, you're not going to get a fair value gap and you're most likely not going to get a breaker block, okay? Because we need to see price aggressively move either higher or lower, okay? Without that displacement, price is not going to move. Okay, we need to see displacement in the market in order for the trade to be high probability. So that's very important. Keep that in mind. All right, number 3 is a market structure shift. You want to see a market structure shift. What is a market structure shift? Okay, it's a break either above a swing high or a break below a swing low. Depending on the direction that you're trading, that is what you want to see. So in this scenario here, once we break below that swing low, we get that market structure shift and the breaker block is created, okay? If we never broke below that swing low, we'd have never had the market structure shift and we'd have never created a breaker block in the first place. Okay, number 4, this is very important as well and it's very obvious, okay, is gonna be a fair value gap and the breaker block, okay? So what comes after a shift in market structure is gonna be the entry model. So you wanna see a fair value gap which is overlapping a breaker block. That is going to be your entry point. Okay, number 5 on the checklist, this is a must, okay? If you don't see an entry inside of one of these macros, there's no trade. It doesn't matter how clean the trade is, it has to be inside of one of these macros, okay? So your entry must be inside of the 9:45 to 10:15 macro or the 10:45 to 11:15 macro, okay? If it's not inside one of these macros, then there's no trade. Now we're strictly trading the New York session, okay? So if you're trading a different session, for example, like London or Asia, which I don't recommend, London is okay, then there is a different macro that you can trade during the London session. But this video specifically just focuses on the New York AM session, okay? There are macros inside of London and also the PM session, which you can trade the unicorn model in. I'm personally not going to be going over that in today's video because I don't trade the PM session and I don't trade London session, okay? I strictly trade the New York AM session. All right, number 6, you want to have a valid stop loss of 30 handles on NQ, okay? So we're trading NASDAQ. You don't want to be risking more than 30 handles on NASDAQ, okay? Very important. That's more than enough for the trade to actually have some breathing room and to play out, okay? Anything more than 30 handles, in my opinion, you're risking way too much and you're not really managing risk correctly there. So that leads on to number 7. Once you've obviously entered inside of the macro, you have a valid stop loss placement as well. What is the next factor on the checklist? It's gonna be target the draw on liquidity. So examples of draws on liquidity, there's many out there, okay? A very clean pair of equal lows, equal highs. Session liquidity is another one, right? London highs, London lows, Asia highs, Asia lows, new week opening gaps. The list goes on, guys. There's a ton of draws for liquidity, okay? So yeah, that is it for the checklist, guys. Make sure to screenshot that and follow that religiously. We're also gonna go over a very clean example of the unicorn model inside of TradingView so you actually see a live environment example and you can understand the strategy a lot better rather than me just going over a PowerPoint and explaining things. Now, there's also a ton more points that I'm gonna be going over inside of the trading example. So just make sure to get your notepad and pen out, pay attention, take notes, and then that way you can have your own fully updated A+ checklist for this strategy. All right, let's jump straight into the example, guys. All right, guys, so starting off, okay, you're gonna wanna pay attention because this is very important. What I'm about to share with you guys is literally gold dust. Okay, not many people go over this. I'm gonna be literally spilling all the beans. I'll be going over everything that I do every single morning before the market open, how I approach price, etc., etc. Okay, and we're also gonna be breaking down the unicorn model A+ trade. So let's jump straight into it. So first things first, okay, what asset are we even trading? Is gonna be NASDAQ. NQ, we trade futures, we don't trade Forex, okay? We're trading NQ. So whenever you're trading futures, there's primarily 2 assets that you wanna be paying attention to. So this is how I have it usually when I'm trading, right? I have the majority of my screen on NASDAQ, where I'm taking my entries, and then I have ES on the other side, just so I can pay attention to see what's going on that asset also. The first thing that I do when I approach price in the morning is I start on the daily time frame. So make sure to write this down, guys. Daily time frame. You start on that time frame and you figure out your buys for the day. Looking at this time frame here, does it look bullish to you or does it look bearish to you? Me personally, it looks very bearish. Okay, price came up, it's tapped into a bearish fair value gap. It's respected it. It's come down, right? And we've actually swept this low. However, we've not really ran through that low. We've just only wicked below it. So whenever we see that, I would definitely expect for price to come back down, actually run through that low, taking sell side, not just wicking below and actually creating relatively equal lows. In this case, my drawn liquidity would definitely be still lower because it's unfinished business down here. And price is still respecting this daily imbalance here, right? So we have a bearish daily fair value gap that the day prior, the candle actually closed inside of this gap. So it wicked all the way up, but notice how the body of the candle closed inside of the gap, meaning that it's actually respecting that imbalance. So bearish PD arrays are getting respected, meaning we will most likely have a bearish bias, okay? The way I like to frame my bias is of imbalances on the daily time frame. So if we have a daily bullish fair value gap that's getting respected, obviously my bias is most likely going to be bullish. In this case, we're inside of a bearish gap, which is getting respected clearly, so my bias is going to be bearish, okay? That's how I like to frame my bias on the daily time frame. Number one thing on your checklist right now should be start on the daily time frame, figure out your bias, okay? Because without a bias, it doesn't matter what trading strategy you're trading, you're going to be trading blind, okay? Your trade and the reasoning why you actually enter that trade has to have some reasoning and logic behind it. You can't just be entering a bearish unicorn model or a bullish unicorn model, right? Fair value gap here, fair value gap there. If you have no bias or drawn liquidity, you have no reasoning or logic where price is heading to, you're entering blindly. You're just simply gambling. You're just trading patterns on the screen. So you need to have a bias, okay? Very important. Start on the daily time frame, figure out your bias, and then you want to jump down into the 4-hour time frame, and you want to start marking out fair value gaps, any order blocks, any high time frame breaker blocks that you see, things of that nature. So 4-hour and the 1 hour is for PD arrays, and then the 15-minute time frame is one of the most important time frames to mark out your liquidity levels on. So things like session liquidity, London, Asia, previous daily high, previous daily low, that's the time frame that you're going to be using, is the 15-minute time frame. All right, guys, so as you can see, I've marked out all my levels here, okay? We have our previous daily high, we have a drawn liquidity, which are these equal lows. We have our session liquidity down here, London lows. We actually also have this low here, which is Asia low. Asia session is from 8 p.m. to midnight. And we've already swept London highs, which is a very good sign. We have a bearish bias. So number one on the checklist, we've already swept liquidity, all right? What are we looking for next? It's going to be a displacement lower and a market structure shift. So the time frame that I'm going to be jumping into now is the 1 minute, okay? You want to see an entry ideally on the 1 minute time frame, okay? So anywhere from the 1 minute to the 5 minute maximum is the time frame that you're going to be entering on. So if you don't see a fair value gap on the 1 minute, you go to the 2 minute. If you don't see a gap on the 2 minute, you go to the 3 minute, and so forth, okay? So we're currently on the 1 minute time frame here. I'm going to be looking for a displacement in the opposing direction. So let's see how this plays out. Okay, price came up, we actually swept internal buy side liquidity again, and we're starting to get a displacement lower here. Now, very key point here as well, guys, you're going to be looking at ES, okay? So ES has to have the same price action as NQ does. If ES does not have a fair value gap or a breaker block, for example, but NQ does, that's not a valid trade. That's not something that I'd be looking to take. So I want to see the exact same price action that I'm looking at on NQ, but also on ES. So in this scenario here, this actually looks very clean on the 3 minute time frame on both the assets. Hence, we're going to be using the 3 minute time frame. Okay, so as you can see here, price came up. Look how close it came to that internal buy side level. Traders are looking at this. They're thinking, right, this is resistance. I'm going to be taking some sells and I'm going to be shorting this. Okay, they enter short. They get that initial move, right? They think that they're in the money, they're going to have a nice trade here. Absolutely not, okay? Price creates our next swing low. It then comes back up, taking out all those traders that thought this was resistance. A lot of stop orders are getting filled, right? And we get that next higher high, which is then followed by the lower low, which I initially explained at the start of the video, right? Swing high, followed by a swing low, followed by a higher high, followed by a lower low. So inside of this price leg, which candle are you going to be marking out as your bearish breaker block? Okay, pause the video here. Let me know in the comments and see if you got it right. Okay, so hopefully you paused the video there. That's a learning experience for all of you. The bearish breaker block in this scenario here is going to be this candle here. Okay, so going back to what I said at the start of the video, is always going to be the lowest down close candle since we are bearish. Okay, if we were bullish, it would be the highest up close candle. Since we're bearish, this is the lowest down close candle inside of this price leg here. Okay, so we get that high, low, higher high, lower low. Displacement, we close below this swing low. So we've got the displacement, we've got the market structure shift, and the breaker block is formed. So this candle here is going to act as your breaker block. And then of course we have this fair value gap here. Now notice how in this scenario, it actually looks a lot cleaner on ES. Okay, the breaker block here is overlapping with the gap way better than it is on NQ. So again, very important to be looking at ES, because if you're not looking at ES, you would have not noticed that. Now, the best place to put your stop loss is of course going to be the swing high, but as you can see here, we're risking way too much. Okay, so there's either two things that you can do in this scenario, right? You can enter off 50% of the fair value gap, which is here, or you can have your entry off of the breaker block, okay, which is here, which in this case would give you a valid stop loss of 30 handles at the swing high. So whenever we have a big price range, you're gonna measure from swing high to swing low, find 50%, wait for price to retrace back into a premium of that range, and then enter short of that. Okay. So boom, London lows, TP would have been smashed. You can take a portion of your position off once we hit London lows. Asia lows gets hit as well. You can close a further 20%. And then once the drawn liquidity gets met, obviously you'd be closing out fully for 134 handles in profit. Okay, amazing trade, A+, textbook setup, a 1 to 4 risk to reward also. Now, I do like to enter on the 1 minute preferably, but in some cases, you have to use either the 2 minute or the 3 minute or even the 4 minute or even the 5 minute. Okay, because if you were trading this on the 1 minute, it doesn't really seem that clear to you, does it? Right? We get that displacement, price then slowly trickles up. You can't really see the unicorn model, can you? Whereas if you actually zoom out and you hop on to the 3 minute, it looks very clean. Okay, I have a clear breaker, clear fair value gap, a clear entry model that you can obviously enter and take advantage of. So yeah, just to wrap up the video here, guys, key points that you want to look out for is of course, number 1, a sweep of liquidity, right? Number 2, a displacement and a market structure shift. Number 3, a breaker block that is paired or overlapping with a fair value gap. Number 5, a valid stop loss placement of 30 handles, whether that's above the displacement candles high or a swing high preferably. And number 6, a clear drawn liquidity. And also don't forget, okay, notice that our entry was actually inside of the 945 to 1015 macro, okay? So price entered this area at 942 into the gap, and then we had an entry at the breaker block at exactly 945. Okay, so isn't that strange, guys, right? Isn't that strange that you get an entry exactly when the macro starts at the PDRA, which is obviously in this case the breaker block? If that doesn't tell you something, then I'm not sure what will, right? But price is very algorithmic and it moves in very specific ways. So make sure to have your entry either at the fair value gap or the breaker block, okay? Whichever one gives you a valid stop loss placement, have your entry there, right? In this case, it's gonna be the breaker block because we have a valid stop of 30 handles and it's also resting at the swing high, okay? If your stop loss is not valid, then you either skip that trade and don't take it, or you enter and you risk getting stopped out. Totally up to you. In my opinion, I would rather wait for a perfect entry with a valid stop loss rather than just taking that trade blindly and most likely getting stopped out. And then watching price going in your favor or direction, right? Which is the worst thing that you can ever experience. I would not recommend it. So yeah, guys, that is gonna be it for today's video, right? Hope you found it insightful. Hope you lot learned something. If you did, make sure to drop a like, drop a comment, and subscribe to the channel. If you wanna see more videos like this and more strategies, more models, I was thinking of doing a video on a continuation model. Okay, most of the strategies that I trade are reversals. The silver bullet is a reversal model. The unicorn model is a reversal model. There is one model that I've not really shared publicly on YouTube, and it is a continuation model. I've kind of kept it private. I've not actually released it to the public at all, but sometimes I do take trades which are continuations, and the whole Discord community, right, they're asking me, Ben, what is this strategy? We don't know anything about it. You know, can you teach us? So it's definitely a highly requested topic. So if you don't want to see it, drop a comment. I'll make sure to make a fully detailed video on it and educate you guys. So yeah, guys, before I end the video, all right, make sure to take advantage of that 50% off lifetime access sale. It's only going to be active for the next 24 hours. So make sure to go secure your seat right now. If you are someone that's actually looking to take your trading to the next level, you're looking to get funded and you want to start receiving consistent payouts month to month, get inside of that live trading Discord community. Links are in the description. But yeah, other than that, guys, hope you lot enjoyed. Take care. Have a great rest of your day. I'll see you in the next one.